This video presents a real-life business story on cost, margin, and profit. The RealReal Chief Financial Officer aims to limit costs, boost margins to turn profit. RealReal is a luxury consignment retailer which works to keep expenses steady while increasing sales of higher-margin products, as told by the finance chief and interim co-CEO Robert Julian. The RealReal Incorporated finance chief wants to rein in costs and sell higher margin items as the luxury consignment retailer aims to turn its first profit 3 years after it went public. Chief Financial Officer Robert Julian, who joined in October, said the company has historically focused too much on increasing total transaction values and not enough on selling the goods that bring in the most profit. He also serves as interim co-chief executive, along with Rati Sohilavesk, the company's president, following the June resignation of founder Julie Wainwright from the CEO post. Mr. Julian's strategy includes selling more goods on consignment, meaning second-hand items from customers' closets, and fewer goods purchased through wholesalers. I would say there's been massive changes in terms of how we look at the business, how we analyze the business, what we consider to be our key metrics and key indicators, Mr. Julian said. The San Francisco-based company, which was established in 2011, sells items such as Hermes bags and Rolex watches online as well as through 16 bricks-and-mortar stores in cities including New York, Chicago, and Los Angeles. During the second quarter, 28% of revenue came through direct sales from wholesalers and other vendors, 63% came from consignment, and the remainder came from charging buyers for shipping. Gross margin on the company's direct sales was 14%, compared with 85% items sold on consignment, Mr. Julian said. The RealReal has boosted sales since its initial public offering in 2019, but profit has remained elusive. During the second quarter, revenue jumped 47% from a year earlier to $154.4 million, while gross merchandise value, measuring total transactions, increased 30% to $454 million. The company reported a net loss of $53.2 million, compared with a net loss of $70.7 million a year earlier. Its stock price has plummeted this year as investors have shifted away from unprofitable companies. Shares of the RealReal have declined by around 80% since the beginning of the year, closing Thursday at $2.38. The RealReal sources most of the consignment goods it sells through its sales staff, who meet with clients in their homes or at company stores to help customers pick out items to consign. It also allows clients with second-hand wares to ship the items to the company or drop them off at one of its 16 stores or 3 consignment offices. The company takes possession of the items it sells, but doesn't record consignment goods as inventory that it owns. Instead, it generates revenue by taking a percentage of the proceeds on transactions between buyers and sellers, called a take rate. Last year, the RealReal's take rate on consignment items was 34.7%, down from 35.7% in 2020. Goods purchased directly from wholesalers or other vendors do count as inventory. The RealReal this year set a goal of achieving $100 million in adjusted earnings before interest, tax, depreciation, and amortization in 2025. In 2021, that figure stood at a $126.9 million loss. The company plans to hit its profitability goal by increasing revenue at a faster rate than expenses, Mr. Julian said. Analysts, who said the plan is feasible but ambitious, said they expect the company to report net income by 2027. The biggest lever the company can pull to improve its profitability is putting a lid on fixed costs, Mr. Julian said. Expenses have increased as the RealReal has expanded by adding staff, opening new locations and setting up the infrastructure necessary to operate an e-commerce business, he said. Operating expenses during the second quarter rose 8% from a year earlier to $138.7 million. There are a lot of infrastructure costs that they need to operate their business, said Tom Nikic, a senior vice president of equity research at financial firm Wedbush Securities Incorporated. He noted the RealReal authenticates its products, which involve staff, facilities, and security. Mr. Julian said he aims to keep fixed costs increasing no faster than inflation. In 2021, 62% of the company's operating expenses were considered support functions, and therefore primarily fixed costs, the RealReal said during an investor presentation in March. The company's push to generate a profit comes amid uncertainty about the overall economy. It is one of several retailers that recently lowered financial guidance for the year. Department store chains Macy's Incorporated and Nordstrom Incorporated this week cut their outlooks, citing risks of a steeper downturn. The RealReal now expects an adjusted EBITDA loss of between $100 million and $110 million this year, compared with previous guidance of an adjusted EBITDA loss between $100 million and $80 million. The company on an earnings call this month attributed the revision to challenges sourcing consigned goods, as well as shifts in consumer demand toward lower-priced, everyday apparel and away from higher-end items such as jewelry and watches. Sean Dunlop, an equity analyst at research firm Morningstar Incorporated, said he doesn't expect the RealReal to see a significant decline in demand in 2022. The market for online consignment clothing has become more competitive, said Oliver Chen, a managing director at investment firm Cowen Incorporated. In addition to publicly traded consignment retailers such as Poshmark Incorporated and ThredUp Incorporated, consumers also sell second-hand luxury goods through e-commerce giant eBay Incorporated. Anyone who resells Gucci is a competitor to the RealReal, Mr. Chen said. Here is the end of the story.